Hello everybody, welcome to the Technical Analysis webinar. My name is Troy. I'll be leading the session this afternoon for AvaTrade. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind that when you're trading, all trades have risk of losses. So you want to manage risk in a way that makes sense for you. Now, the other side of that is every trade you take also has a good potential for profits. So you want to manage things in a way to go after those potential profits while not risking more than you're comfortable with your trading strategies. Keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, what we're looking at today as an emphasis is technical analysis. And in general, there are a couple different ways to go about doing technical analysis. Before we get on the live charts, we'll just talk real quick about the basic idea. Looking back at the candlestick charts, looking for patterns, predictable movements that the past might suggest could potentially occur in the future. That's the idea of technical analysis. Now, the future movements are not guaranteed to mimic the past movements, but they certainly are helpful to look at and can help you improve upon proper entry points and exit points and overall profitability on the account, hopefully. Now, we in the webinars tend to lean mostly on manual methods of technical analysis. And what I mean by that is we look at the charts and we visually find the patterns ourselves, draw our own support levels, resistance levels, draw our own trend lines, etc. The other way to go about doing that is to use an indicator that does that for you. Now, I like to believe that we're smarter than indicators. Indicators can't take into account the latest fundamental news. They can't look beyond the programming of the indicator and understand things in a bigger picture the way that you and I can. And so with a bit of practice, what you'll find is manual methods of technical analysis as the leading way of doing technical analysis, you may find works better for you, and you use indicators to help support proper entry points in the direction that you already know you want to go. Indicators tend to throw signals in the right direction and the wrong direction. If there's a market that's running up one day or running down one day, the indicator, when the market's dropping, eventually is going to tell you to buy, even if the sentiment is horrible and you feel like the market's going to keep dropping. The indicator, after enough dropping, keeps telling you to buy, or vice versa, after enough rising, keeps telling you to sell. And you might know better from your technical analysis that you expect maybe a resistance level to break through rather than reverse based on the fundamentals that are added in with it. So indicators are nice. They can help confirm maybe what you're already thinking. But in general, manual methods, if you learn how to do it, tend to be a bit more reliable than indicators by themselves. As we go along, please, if you have any questions, you want to give any suggestions or inputs, please go ahead in the chat box and do so. Now, if we take a look at some of the major headlines, fundamentally speaking, before we jump on the charts, it's probably a good idea, and it doesn't take long before we do our technical analysis to get an idea of what's the sentiment right now. And so one quick way to do that is if we look at a website like investing.com, there are others that gives you a quick snapshot of what's happening for the day. And what we see is the futures are slightly red, okay, not in a big way, but slightly red. The US 30 and the US 500 futures are red. Here where it says Dow Jones and S&P 500, those are yesterday's close. And these up here are the futures that are running before the US market opens. And so yesterday finished in the red. Today has started out on the futures in the red. So already we're thinking, okay, kind of negative sentiment. Then we look and we say the volatility index, the VIX, which is the volatility or fear index, is up almost 3%. Not huge, but that shows there's some fear on the market. Again, feeding into the idea of some negative sentiment. Okay, so volatility or fear index is in the green. Futures are in the red, coming off of a red day yesterday. So these are not largely red, and the volatility is not largely in the green, but they are in that direction. So if we're on the fence and we're leaning and we don't know which way to go with our technical analysis, you might be leaning towards the direction you would expect the instrument to go with negative sentiment right now, okay, which would be maybe a strengthening USD, maybe a dropping of indices, a dropping of oil, dropping of gold if there's economic fear out there, which is the opposite of inflationary fear. And so these are the ideas that you can have in terms of sentiment before doing your technical analysis. Now, we look at the headlines too. China, growth jitters weigh on global stocks, dollar buoyant. Okay, so that headline feeds into what we just said as well. There are growth jitters weighing and some fears about China as well right now, for a couple reasons in China. One is the Delta variant is spreading like crazy there now, which could lead to more economic shutdowns in the second largest economy in the world. And there are growth jitters, not just out of China, but the US had less growth than expected with their past recent numbers. Also some other areas, UK, European Union, etc. So the inflation that seemed to be larger than ideal now has become maybe lower than ideal. There's been a bit of a reversal of the economic recovery that was occurring, or at least a slowing of the economic recovery that was occurring. And when they say dollar buoyant, they're talking about the US dollar, which tends to strengthen when there's fear on the markets. It's somewhat of a safe haven currency, along with the yen and Swiss franc. So dollar buoyant, that feeds right in to also the idea that there's some fear or negative sentiment on the market. We look at the next headline. This is from Reuters. Investors brace for a great fall in China. That doesn't sound nice. That sounds like negative sentiment as well. What are they talking about? A great fall in China. They're tricky there. They're playing off the idea of the Great Wall, right, of China, Great Fall of China. What are they talking about here? There's a industry in general. International investors have been piling into China in recent years, are now bracing for one of its great falls as the troubles of over-indebted property giant China Evergrande come to a head. Okay, so huge property giant in China having some serious over-indebtedness issues. Perhaps too many large loans to people who couldn't afford them. Maybe defaults on houses. I don't know all the exact details, but that doesn't sound good. It reminds me of what happened in the US not so many years back when the property market just had a huge drop, had a huge problem from over indebtedness from people who had bought houses way over their heads. You know, think about it. The interest rates have been ultra low because of COVID. In the US as well, home buying and prices went through the roof recently. You know, people can buy larger amounts when interest rates are artificially low. Well, what if some of these interest rates are variable and the interest rates then go back up? Wow, then people are in trouble. They can't afford those large payments anymore, or larger payments as interest rates rise. So I don't know if that's what's going on in China, but this headline doesn't sound good. If you know, the largest property giant is having problems. So we'll see about that. But in general, that's negative sentiment, more of it today. As we're looking at another headline, UK retailers extend losing streak in August. Okay, again, that feeds into the negative sentiment, that headline. All right, this is all today, right? So this is what's supporting the growth worries. The worry that, okay, the economic growth that we were seeing coming out of the COVID crisis has slowed. All of a sudden, UK retailers extend a losing streak in August. So, we saw the same thing in the US with recent numbers as well. So, not great news, fundamentally speaking. Okay, and that took us all of what, 5-10 minutes to get an idea of the sentiment. Now when we do our technical analysis, we understand why different instruments are moving the direction they are. We're smarter than the indicator. We know which direction we probably prefer to trade. Maybe we're not buying off the support level, but waiting for a jump up to sell off a resistance level on certain instruments, or vice versa, depending what instrument it is. So this is the idea of knowing the sentiment before you get into your technical analysis. Any questions so far? Type OK if you're with me. All right, great. Looks like everyone's all right. Real quick, if you haven't used our custom-made app or trading platform, it really is beneficial both for experienced traders and new traders. It's got features on there for helping you to manage risk, even in a way that even if you're an experienced trader, you can't possibly manage risk the same way at other brokers. We have a feature called AvaProtect that's available on our AvaTrade Go mobile app and our web trader platform. Edgar's good question. You can use investing.com. I also used Reuters just now. You also can find news in our web trader platform. I'm about to show you that. It's focused more on stocks, less on some of the other instruments, but you can use different avenues, Bloomberg as well. You know, some of the sites may limit your content use unless you have a subscription. Others don't. There's nothing magical about the sites I just used. They're just ones I commonly use because I'm comfortable with them. But you can use lots of different sources that you trust to get an idea of the overall headlines and sentiment. Good question. Okay, so if I want to use the AvaTrade Go mobile app, I can go to trading platforms with my mobile device, obviously, and then click on AvaTrade Go, and I can download the app from my app store. Okay, depending on what operating system you're using. And the AvaTrade Go mobile app, you'll see in the order window has all these great features. AvaProtect, which protects you against any and all losses for defined time periods for a small premium cost. So zero risk beyond the cost of the premium for the duration of the protection, which can go by the hour, by the day, etc. If you program take profits and stop losses, it calculates for you your potential profit, your potential loss in your account currency. It does all the calculating for you. It calculates your margin requirement before you place the trade. The mobile app does all of that for you. So that part of your risk management, it saves you time, even if you're experienced and know how to do it manually, saves you time. And also if you're new to trading, it's a game changer because you may not know how to calculate exposure and potential profit, and here it's doing it for you. So if you accidentally put too large of a trade size, you'll know it. You'll know you're risking maybe more than you want because it'll show you when you program your stop loss how much you're risking. And you'll say, oh, I didn't want to risk that much. Let me lower my trade size. And then it'll adjust automatically as you change the trade size. It'll tell you how much you're risking and what your potential profit is. So very valuable tools in our mobile app that you just don't find in the Mt4 app and the Mt5 app. Those features are not there. But you're welcome to use those apps as well with our platforms. Now, if you log in from our main website here, you're in the web trader platform, which looks like this. This also functions not just from your PC or your Mac, but also from your mobile devices. You might prefer this to the mobile app. It's up to you. So you've got a lot of options with us. Both the app and this platform trade right on top of your Mt4 and Mt5 accounts. You can trade on your demo accounts, on your live accounts, using these platform options. And the trades will show up in the other login methods as well. It's the same accounts, just different user interfaces that have more advanced features, like I'm showing you here. So, you know, if you're trading on gold, silver, or FX pairings, what you'll find is you have AvaProtect. On any instrument that you trade with us, you have the ability to calculate your potential profits and your risk just by simply programming a price for your take profit and stop loss. You'll see possible profit, possible loss right here. Calculates it for you. If you want to cover your risk for a flat premium cost, you do that. Pick your time period that you want the coverage. It shows you how much the protection costs. You might be able to make $1,000 and only risk X amount for the premium cost for that time period, right? So depending on the amount of volatility you expect, this could be a really good deal to have this kind of protection for a small premium cost. So very nice features, very simple to use. Now, we're talking about technical analysis today. Edgar's, you're asking about Fibonacci levels. I'll show you real quick. Sure. We'll take a look at Fibonacci retracement levels in a moment, and we'll see how they line up to the lines we draw ourselves. It'll be interesting to see if the Fibonacci levels agree with us, our manual technical analysis. And I'll show you how you can use it as a confirmatory mechanism to check your own technical analysis. And so if you want technical analysis from the WebTrader platform, very easy to find. Click here, go to Trading Central, which are premium features we supply for free. Most places you have to pay for technical analysis signals. Just click on something like Analyst Views and check it out. You have signals from professional analysts from Trading Central. And so they come in time-stamped. You can see the time that they came in. You can check if they're still valid. It shows you the price levels they expect the movement to go through, the support levels, the resistance levels, the direction of movement, the price that you would get in and get out. All of it's listed there. Okay. Short here, it says our preference. Short positions below 117.90 with targets at 117.50 and 117.35. So even if it's an older signal, you might look and see that, okay, it didn't enter the preferred zone yet, so it's still a good signal. You can set up your pending order for those price levels, do a market move if it's in the right place. Very nice service, professionally done, outlined for you with the thinking, which indicator was used. Here they're talking about the RSI. Very nice service for technical analysis done for you. And this is available not just on FX. You can switch categories. You've got cryptocurrencies here too, okay? For those of you in an area of the world that allows cryptocurrencies, I know some areas like the UK don't allow it on the accounts with us, but many areas around the world, you have cryptocurrencies available and you have those signals as well. So make use of those if you wish. Again, no one signal is guaranteed to be right, but someone's taken the time to do the technical analysis for you, and you can read it in your own way. It's outlined with the lines and the real prices and all of that there for you. It's a time saver, and then you can make up your own mind what you want to trade. At the very least, it's a time saver. So if we want to jump to, let's say, the Mt4 platform, I know a lot of you are more familiar with it. And so let's take a look at the Mt4 platform. This is gold. Let me test your knowledge a little bit here. Why did gold drop if there's fear? I thought gold was a safe haven. Why did gold drop? These are 1 hour candles. Over the past couple days, why did gold take this drop right here, right? You see the support level I drew up here. This was an old support level, and as soon as it broke that support level, boom, down went gold. Why? Why did gold drop with fear? What is it that strengthens many times which currency when there's fear? Economic fear. That would help pull gold down. Yeah, the dollar index, the US dollar in general. As it strengthens, gold tends to drop. So you'd say, okay, so what is it? What kind of fear then makes gold go up? I thought gold was a safe haven. So gold is a safe haven against inflationary fears. Okay? Yeah, negative correlation with gold. US dollar and gold tend to go in the opposite direction. Dollar strengthened, so down went gold. if the fear was not about a slowing economy, which it is right now, the fear right now is that the major economies around the world are slowing down again, which is the opposite of inflation, right? The fear right now is about a slowing economy. So that tends to make gold weaken and the US dollar strengthen. What do you think would happen if the fear was about growth being too fast, which is what it was a couple months back? If the fear was there's too much inflation, that the economies are doing too good too fast, then gold goes up and the US dollar weakens. You see how that works? So fear is not all the same. Fears about a slowing economy, gold tends to drop and the US dollar goes up. Fears about too much inflation, about growth being too good, about GDP numbers rising too fast, that kind of fear tends to weaken currency and strengthen gold. Okay, so you have to pay attention to what's the fundamentals right now. The fundamentals are fear about a slowing economy. It's not fears about inflation. Okay, so right now we're thinking, oh, well, I'd rather sell on gold than buy. And you say, okay, well, gold already dropped quite a bit, right? All the way down to below 1750. Well, it has bounced back up some to 1764, 1765. But the question is that a price that's good to get in on, even if you're going to short gold, right? And so that's up to each individual trader. But at least we understand the direction the movement went. We know why it went that way. And we know why it's having trouble coming back up right now. So you might have a preferred direction. If gold gets up to this support level here, this old support level that broke, support, 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 broken support, down it went. If gold happens to come back up here, what kind of pending order would get you in to sell from that resistance? Because this old support level now should act as resistance if gold can get back up here. What kind of pending order could you program to sell from right up here below that, what should now be resistance level? Edgar's, I'll repeat, fear about slowing economy, gold tends to drop. Fear about the economy growing too quickly, gold tends to go up. So if the fear is about inflation, too fast of growth, prices are rising too fast from too much demand too fast, too much stimulus being handed out, right, caused overinflation, gold went up. If they cut back on stimulus measures, if the economy slows down, then gold tends to drop. Okay. Yeah, sell limit. Thank you. Many of you said sell limit. So if you don't like the price gold is at now, let's say you have in your mind, okay, I want to short gold, but you don't like the price. Well, okay, then obviously you're waiting for a higher price to short it, or you could be anyways. So maybe just below this old support level, if it gets near there, maybe that's your spot. So let's say 1775, something like that, maybe you like. So we program pending order, sell limit. By the way, we did good on our gold move from the last webinar. If you watched the last webinar, we had a sell position going for the same reason. By the way, I'll show you the results from those simulations we did in the last webinar. Okay, so sell limit, if it hits 1775, we're getting near what we think might be resistance. Obviously, the fundamental news could change, right? The US could announce, hey, we passed our new stimulus infrastructure deal. We're going to hand out $1 trillion more in printed money. Oh, okay, now inflation fears could kick back in and gold could go flying up. So we want to protect ourselves against a change in the fundamental situation. As we know it now, we expect gold probably to drop. But if the fundamental news changes with a new headline, we need a stop loss in order to protect ourselves, right? Or a pending order, or use AvaProtect with your gold move by using our web trader platform. In some way, manage the risk, because nothing's guaranteed. The news could change. Okay, so we program for what we know now. And so, you know, the resistance levels here. So if it gets up to 1790, something changed. If it hits 1790, I'm out on my sell. And this this example, because that means something changed enough in the momentum to break back above that resistance level. And my take profit, I think if the sentiment stays the same, it shouldn't have any trouble reaching the low that it already reached. So if we go just above that and say, okay, 1752, nothing has to change for it to reach 1752. That's above the low that it already hit this week. So we're looking at potential profit of what, about $23 to the take profit, and risking only $15 to the stop loss per ounce. So if we get this price, we have a much better potential profit than we have risk. Okay, so maybe 60% potential profit compared to 40% risk, something like that. A nice bit more potential profit compared to risk. Kind of a 60-40 split if you had 100 as even. So it's a nice setup, technically speaking, below the resistance level. It's in the direction of the current fundamental news and sentiment. The question is, will it reach? It might just drop now, right? If we go the 5-minute candles, we can say, boy, it looks like it's ready to drop now. And so you can have a pending order for a preferred price level. You also could say, you know what? I'm also going to sell from the current price, and I'm going to put my stop loss above this high point. If it breaks above this high point, then okay, maybe it's on its way up to our pending order price. If not, I could make a nice profit, dragging my stop loss down to a support level down here. Okay, maybe I like this support level here. Okay, that's about equal risk to reward in the direction of the current sentiment, right? Equal risk to reward, maybe a little bit better on the reward side with the current sentiment. Now, it doesn't even have to break a support level to hit my take profit. If I'm more confident or more patient in this movement, then maybe I say, you know what? Let me go to 30-minute candles, and instead of putting my take profit at this support level, I could put it down at the lower one. Okay, that's up to you. The way I set this up now, this move is more of a scalp move. I'm trying to catch the wave right now and take my profit before it has to break the first support level here. So that's a short-term move. The pending order up here is more of a longer-term move if we get the right price, right? Okay, so two different strategies at the same time. Could be wrong on one, right on the other, and still have an overall profit, right? So two different ways to go about kind of the same thing in terms of sentiment thinking, that we think maybe gold could drop. Now, I'm not here to tell you gold has to drop. If you feel gold should go up, you should be buying on gold. Absolutely. But right now, looking at the technical analysis and the fundamental news situation, we can see the downward breakthrough here on the 4-hour candles. Gold broke majorly a support level. Usually when there's that large of a breakthrough and that big of a movement, you get a bounce back up, even though the sentiment could still be down. And so we saw the typical bounce back up after such a rapid, large drop. It's not unexpected for a bounce like that, even if you're going to see continued downward movement. Okay, that's the technical reading of the tea leaves, so to speak. That's what we can see from this large breakthrough and rapid drop. Okay, downward sentiment. So whether you're looking at the headlines or reading the candles, this shows negative sentiment for sure on gold. Okay, but by all means, if you're bullish on gold, buy. I'm not here to tell you not to. Okay, so let's look at the US 100. And if we go to 1-hour candles, we see downward movement today as well. Over the last 1, 2, 3, 4, 5 hours, downward movement. We see that there's a resistance level here. Okay. This was a breakthrough of a support here. You see, this was support on this side. It broke through. And like I said, broken support becomes resistance here. Resistance, resistance at the same level that it used to be support. It becomes resistance, 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 and resistance. Okay. Why is the resistance holding instead of breaking through? because there's negative sentiment today on the stocks, on the indices. So we already knew this morning that there was negative sentiment. If you already understood the strategy we're using right now, you could have already had a sell limit to sell from right here. When this came up and hit this resistance level, you could have already been in on this drop. Okay, we're a bit late on it now. It's already dropped for 5 hours, but it doesn't mean it won't keep dropping, right? Two things you can do here if you feel that this should keep dropping, okay? One would be to say, okay, there's a support level right here. You see it hit here once and bounced, and then now it's trying to test this again. If it breaks this support level here, you could see a plunge down to the next support level down here. So what kind of pending order would sell only if it breaks the support level and hits your price down here? What kind of pending order could we program to sell only if it breaks the support level and drops to a lower price? Okay, the last pending order we did was a sell limit. With gold, that's if it goes higher, we want to sell, right? In this example, we're saying if it goes lower to confirm downward momentum by breaking that support level, then you can sell. So what kind of sell position sells from a lower point? What kind of pending order? A sell stop. Good. Edgar's, you were first. Very simply, we can go to US Tech 100. We can go to pending order. We can go to sell stop. And by the way, on the web trader, you don't have to tell it sell limit or sell stop. If you do your pending orders on our web trader platform or in the AvaTrade Go mobile app, what you'll see is you just tell it what price do you want to sell from. And it makes it the right type of pending order automatically. So there's an extra step with the MT4, but works just fine. Not as fancy as our web trader. Okay, so we've got the sell stop chosen then. Now we say if it hits 15,450, that means it broke that support level. It could be a false break and go back up and hit our stop loss. That's the risk you take. But many times, once it breaks the support, it does like you see here. The last time it broke below this support, look at the drop here, right? That's what we're hoping with the sell stop would happen again. If it hits our price, we hope it plunges, okay? So it's 15,450. Now it's so close, it might not let us set the pending order. If the market price is too close to the pending order price, it'll tell us that the price is too close. And in that case, we just have to either wait for it to bounce up further away or wait for it to break through and do a market move. Take profit just before the support level down here might make sense. 15,370, let's say. Okay, and let's see if it allows us to do the pending order. It did. Okay, it's not too close. So if it drops much further and hits this green line, it's selling, okay? And if we say, okay, maybe we cheat this down just a little to make sure it breaks the support all the way, you can adjust it just by dragging the pending order price. So I've got my stop loss about 1/5 of the risk or 1/4 of the risk of my potential profit. I only have to be right on this 1 out of every 3 or 4 times to make a profit. So this is limited risk, high reward here. And the technical analysis strategy is if the support breaks, look what happened here when the support broke. It plunged. Okay? Look what happened here when this little support broke. It plunged. So we're hoping that if it breaks and triggers our trade, it will plunge. If it's a false breakthrough and it goes back up and hits our stop loss, okay, we take the small loss. We only need to be right once out of 3 or 4 tries with this type of setup, and we're in profits, okay? And really, you should be able to be right at least 50% of the time, okay? Hopefully. If you're setting these up in a way that aligns with the fundamental news and with good technical entry and exit points, okay? So if this goes flying back up, we're not losing. We didn't get in because it hasn't broken the support yet. Now, what if this comes back up here to this resistance? What kind of pending order can we put that if it tests this resistance again, we sell? If you are bearish on this market, you believe the negative sentiment will keep this down, you could prepare a pending sell limit to sell from up here if it happens to bounce back up. So either way, then you're getting in on this move, one way or another. Either it bounces up and hits this price and you sell with your stop loss just above the resistance, or it breaks the support and you sell with your stop loss just above that resistance. Now, if you're more patient, you could have this stop loss above 2 resistance levels. That eliminates the chance of it breaking through, activating your trade, hitting your stop loss, then dropping. So if you're afraid that could happen, you could put your stop loss on the sell limit above 2 resistance levels up here, right? Now it's about an equal risk to reward. 50%, equal risk, equal reward, 50-50 comparison, or 100-100 comparison, however you want to look at it. So there are different concepts here with stop loss distance. By having it further away, you're less likely to have it trigger your trade, hit your stop loss, then keep going, because your stop loss is through 1, 2 resistance levels. If you want less risk, though, in terms of overall distance to your stop loss, then you have it just above the 1 resistance level. Okay, I kind of like that concept. And if it is going to come up here, then I'm going to go ahead and have a sell limit ready to go to get that better price. Okay, sell limit from a price somewhere up here, let's say 15,520. And then our stop loss could be just above that, 15,550, something like that. And take profit. Take profit could be at the first support level or the second. If we go with the first one, it's 15,460. There we are. So now we have potential profit about double the risk on the move. If it goes up to the resistance, you're in on a sell. If it breaks the support, you've got much better potential profit compared to risk as well. Okay, so with this type of setup, you're all in, basically. Not, I don't mean balance wise, but sentiment wise, you're all in on the sentiment because you've surrounded the movement, guaranteeing that you're going to get a sell position one way or another as this either goes up to the resistance or breaks the support. Okay. We could take a quick look at wheat, sure. Let's see if there are any questions. Any questions on what we've looked at here? Now would be a good time to type. By the way, I mentioned some of the moves we did in the last webinar. You see Bitcoin went up even more. I cut it off early just because I wanted to clear my demo account out, but you see it closed in profit. It would have been up a lot more. I let the gold one run. You see the date. This was from the webinar on the 14th. Gold went up and made a nice 1,200 plus profit. We lost on these two. That's 1,000 approximately lost. So overall, almost $300 profit. You see it's 50-50 results, but a nice return. And that's the idea of what we're doing here. We're getting opportunistic entry points and exit points where we can actually go after a larger percent profit than we have to risk to get beyond resistance levels and support levels, etc. And so that's what we mean by opportunistic entry points. You actually can pull a profit even if you're trading 50-50. Okay. And many times you could do better than 50-50 when you're taking into account both technical and fundamentals. If you're asking about expiring options, you might be referring to our options trading platform. It's another style of trading, a different trading platform to do options trading. So I think maybe you're referring to something a bit different. Okay. All right. So let's quickly look. And by the way, a lot of the indices look the same. I looked at the NASDAQ 100 here, the US Tech 100. We could have looked at Dow Jones. We could have looked at the DAX. We could have looked at the Nikkei. There's negative global sentiment. It's not just US instruments. Now, There was a question about wheat. Here's wheat. Okay, and we see that wheat is not moving at the moment. The last candle was perhaps it's moving. Yeah, it's okay. It's okay. I wasn't sure if we're looking at trading on the futures or if it needs to wait to the U.S. market to open, but I see it moving. Seems that the time is up to date. So as we look here, let's see. Okay, so we're looking at a resistance level on wheat here. All right, and if there's negative sentiment on the markets in general, demand for food products is affected as well when there's overall slowdown of economy, etc. Okay, so this looks like a nice resistance level on these 4-hour candles. So if we're doing technical analysis strategies, you could have a buy stop above that resistance. At the same time, you could do a market sell below that. And so if I'm trying to sell on this, we'll see if the market's open on this or not. Sell. There, the market is open. It let me take a trade. So there's my stop loss above the resistance. And I could put a buy stop that if it hits my stop loss on my sell, I'm in on a buy. Okay. In this way, it's a technical strategy. It's not a fundamental move. And I'm not going to pretend to be an expert on the fundamentals behind wheat. You're going to have to look at the crop cycles. Harvest season, not harvest season. What are the weather patterns? Is it a drought year? Is it a good harvest year? There's a lot to look into in terms of the fundamentals when you're trading something like wheat. I'm looking purely technical here. On a live market, you can take a sell market from below the resistance, which is what I did. And above the resistance, have your stop loss and a buy stop ready to go in case it breaks above. Okay. Technically speaking, that's a very simple strategy, and that's a very clear resistance level there on the 4-hour candles. All right, USD Jpy, that's been requested. It's not my preference right now in terms of currency pairings, and I'll explain to you why in a second. What happens to both the USD and the yen when there's fear on the markets? Both the USD and the yen do what when there's fear on the markets? They're both safe haven currencies. So they both tend to strengthen. So it might be harder to predict movements of a strong horse against a strong horse. It could make more sense to pair something like the Canadian against the yen, right? If the Canadian economy is based largely on crude oil and there's an economic slowdown and the price of crude oil has dropped, the Canadian dollar should be weak right now. And you pair it against a safe haven currency like the yen, which should be strong right now with the negative sentiment, that might be easier to predict. Which way will Canadian JPY go? With the Canadian expected to be weak with oil dropping and the yen expected to be strong with the fear that hit the market. It's easier to pick a direction fundamentally. With USD JPY, we're kind of expect fundamentally that they'll both be strong. So it's a little harder to have a preference of what direction you expect it to go. If we look at the technical analysis, this is stuck between a support level here. Here's a support level. Support, 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 breakthrough, resistance, resistance, broke above, support. So this is a price level of support and resistance. And this is a price level of resistance up here. So we are stuck between this price and this price. okay? If we expect the US dollar to continue to strengthen more rapidly than the yen, then you would buy, okay? Since they're both expected to be strong, then maybe this continues to range between the support and the resistance as it exists now. If that's the case, then you would buy on USD Jpy. And you would put your stop loss below the closest support and your take profit before the closest resistance. Because if they're both kind of strong, the support and resistance levels maybe will hold. So you take profit before the resistance, you put your stop loss below the support, expecting it won't break either of these price levels as it meanders between with an equal strong horse against a strong horse, okay? So it's more of a ranging pattern with this pairing that you might expect from the current fundamental situation, okay? If we look at Canadian JPY, you might think differently in terms of a preferred direction. You might prefer to sell on this. And so on the 1 hour candles, we already see a sell-off occurring. Look at the 5-minute candles. Look at the drop. Why did it drop from this price? Let's look at the 4 hour candles and we say, there's some resistance right up in this area right here. Okay? Resistance, resistance, resistance. It didn't quite reach the resistance all the way. It missed the resistance. So I feel this might try to come back up to the resistance before a bigger drop from a technical standpoint. From a fundamental standpoint, you just sell now, right? From a technical standpoint, it didn't reach the resistance level yet. So again, like we did on gold, right? You can say, okay, there's reason for this to drop right now. So maybe I sell on Canadian JPY. I put my stop loss above the big resistance level up here, or above the most recent high right there, depending on your preference. Let's put it above the 4 hour resistance. Okay, oil is down. That should make the Canadian weak because that's their biggest GDP export. Why should the Canadian then break the resistance when the Canadian should be weak, especially on a day when there's negative sentiment and the yen should be strong, right? In general, Edgars, the market is a little flat today. But we said if you're on the fence, it's more negative than positive, the sentiment. That's how we started the webinar. We said, okay, it's not huge in one direction or the other, but if you have to pick, the sentiment's more negative than positive. All the headlines were negative. The volatility index was up about 3%. The futures were in the red by about 0.5%, etc. Everything said, okay, negative sentiment more than positive. You're right. It's not a huge volatility day, at least not yet. We'll see when the U.S. market opens. So many times, whatever the sentiment is, when the U.S. market opens, it magnifies it. So if we've got negative sentiment now, it can become more negative in terms of the volume of movement. As the U.S. market opens, you get a larger volume on the same sentiment if it still exists as the same sentiment, okay? Okay, so this is a market move. Okay, so bigger picture, depends how big of a picture we're talking about, Edgars, on Canadian JPY. Bigger picture is we all believe COVID will end, and at least be controlled better, and the markets will open up, and probably oil prices will go up then, and the Canadian will strengthen. That's bigger picture. If we're looking at one-day candles and a long-term type trade. If you're looking at what's happening today, then it's what we're looking at here. So it's two different things in terms of big picture and or more of a micro type view like we're looking at now on 1 hour candles, 4 hour candles. We haven't even looked at 1 day and 1 week. We're doing more short-term type stuff on today's sentiment rather than looking at what do we think will happen over the next 4 months, which probably is oil could go back up as the economies open back up, right? Okay, so what we're looking at then is a resistance level. We did a market sell. What if your preference was to wait for a better price if you were selling? Then you could put a pending order like we did with gold up here as a sell limit if it goes up to, let's say, 87.14. Okay, So we could do pending order, Canadian JPY, sell limit is selling from a higher price, 87.14. Maybe I only want to risk 10 pips. It's no problem. Stop loss 87.24. Take profit 87 or maybe 86.25, let's say. Okay, there's our pending order. If the movement comes up to the resistance, it'll sell and we'll have a second position. Take profit down here before this support level here, this low point that it hit recently. Okay, so it wouldn't even have to break this low point and you could take a nice profit. Maybe I cheat this up just a little and say, okay, I want it right before this support right here, this wick. If it reaches near this low point, we could take a profit. And that's still a better potential profit from this entry point on the pending order, a much better potential profit compared to risk. Okay? So a couple of different ways to go about the same idea, either with market moves, pending orders, etc. Cormac, thank you for your question. You're asking, do we use simple moving averages with support and resistance levels? The answer is yes, you could. Okay, but you need to keep in mind that the simple moving average indicator doesn't know what the fundamental news is. So, for example, you know, the Canadian just dropped a bunch, right? And if you're looking at smaller time periods with your simple moving average, the simple moving average might say, hey, it's time to buy. It dropped enough, it's oversold based on the recent history, and the simple moving average might say it's time to buy. Whereas you're looking at it from a bigger picture perspective with the fundamental news in picture, and you're saying, I understand that the moving average has dropped in the short term, that the indicator's telling me maybe it'll go up, but the fundamentals say maybe that the indicator's wrong, right? It'd be the same idea with the exponential moving average. In general, any moving averages, any indicators, they're going to be based on the candlestick movements of the look back period that's programmed. And it will not take into account the fundamental news situation. So indicators are great. And I would probably wait for the simple moving average to tell me the market's overbought, now sell. That's what I would wait for today, because I know that it's negative sentiment. So I want the simple moving average to agree with me. I prefer to sell when the simple moving average tells me it's time for the market to drop, then I sell, because now it agrees with me. So I want them to be in alignment rather than opposing each other. I don't want to be trading against the sentiment of the day and against my own larger technical view just because the simple moving average or any indicator is telling me it's time to buy. Okay, so I might wait for that indicator to tell me, okay, in the look back period, the market's overbought. And then I say, but I know I prefer to sell anyways. And so now everything's in alignment. My indicator's telling me to sell. My brain is telling me the sentiment says to sell, etc. Okay, and I've identified a resistance level that I like to sell from below. All of that aligns, and that's called a trading strategy. You know, an indicator is a tool, but it's not a strategy. A strategy is when you align more than one tool together. And those tools can be your own manual technical analysis, your view of what the sentiment is, and the indicator. And you could say, when my checklist, when all three of those agree, when my indicator tells me it's time to sell or buy, when my fundamental analysis also says I should do that same thing, and my manual technical analysis says it's the right time to sell or buy, when all three of them agree, then I sell or then I buy. And that's called a trading strategy. And it works much better. It's more selective than just using an indicator by itself. Typically, it works much better. Okay. Very good questions. Okay, so I think this is probably a good place to stop. Now, someone asked about the Fibonacci levels and our support and resistance levels. I said maybe they would line up. So if I take the Fibonacci retracement tool, it's this one up here, draw Fibonacci retracement. You see, all I have to do is left click on that and it activates it. Now you see it has a little plus sign with lines. All I have to do is left click the top of where I want my Fibonacci tool to start acting. That's my upper resistance level. And I pull it down to go to where I think the lower part is, let's say this support level here. Okay, so that's my upper and lower level. The rest is figured in between. Now, I don't like the colors on here. Let me change the color scheme. I'll right click over this red line. Fibo properties. Let's change the Fibo levels from yellow because they're hard to see with the white background. Let's change it to, I don't know, blue. There's my levels now. So these were the automatic Fibo levels. Resistance level, we picked at the top. Support level, we picked at the bottom. The other levels line up exactly where we drew them. Look at this. Look at this level here. It's exactly where I said there was a support level, and we put our take profit just before that on the sell. You see that? So this Fibo level lines up with exactly where we identified our support level here. Okay? Then if we go up, the next level is here, right in the middle, which you can see that's a support level. Support, 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 support. That's another Fibo level. We come up to this band up here is where we said there was resistance. You see resistance, resistance, resistance right in this area. And you go across and you say, look, that's another Fibo level. And a lot of times traders ignore these middle two levels and they'll use the 61.8 here, which lines up perfectly with our manual resistance slash support level. We've got our stop losses just above that resistance level. And this one lines up perfectly with our support level where we have our take profit just before that price level. So the Fibo levels agree with our manual technical analysis. So now it's confirmatory. We're using the indicator as a confirmatory mechanism rather than as a determinatory mechanism. Okay? We don't just use Fibo blindly. You can if you want, but in this process that we're doing, we didn't use the Fibonacci blindly. We used it to confirm what we already felt was an important price level, and it's right on that level. This 61.8 and the 23.6, those are the two most commonly used levels for important price levels with Fibonacci. And you see our stop loss is just above that level, and our take profit is just above this level here. So we did that perfectly without even drawing those lines. Any questions, comments before we get going? By the way, all of our trades are off to a nice start down there. We got a nice profit showing. If you were a scalper, you could close them all now. Why did they, in the beginning, move more the right direction than wrong? Because we know what the sentiment is right now, right? And so the sentiment's in our favor, at least in the short term. So short-term trading, if you go with the sentiment, a lot of times this is what you see. And you can close the trades before they have a chance to go the wrong way, before the news can change the sentiment, before that next headline hits. So very simple to trade in this fashion. Okay, I don't see any new questions popping up. We've been going for about an hour, so I think we'll stop here. Good luck with your trading the rest of the day. I think the market's pretty easy to read right now in terms of the direction it's going. And you know, there's a lot of movement to come when the US market opens. So go after your chances, get your pending orders set up, get ready for your market moves. I think the movements will only increase through the rest of the day today. All right, everybody, bye for now. Thank you for joining. Next session will be next week. Bye for now.